Ahoy, treasure seekers. The seas of the E-mini S&P 500 futures has been pillaging profits from some and rewarding others. Off the waves, the last 5 hours. First filling our booty chests, then seeing the tide turn on us. Batten down the hatches as we chart a course through these choppy waters. Let's jump right into it. Key buy and sell. Levels or ranges. Value area. High, VAH, 6,858. The crow's nest, a high vantage point. Acceptance above this level means smooth sailing to the next port. Value area. Low, VAL, 6853. The ship's hull, the first line of defense. A breach. Signals we're taking on water and heading for deeper seas. Point of control. POC, 6856. The captain's quarters, where the most trade activity, time was spent. The current X that marks the spot. Support zone, 685, 3 to 6854. The sturdy plank. Strong bids will fight to prevent a walk-off. Resistance zone, 6861 to 6862. The enemy's cannon deck. Shorts are stockpiling their firepower here. Single prints escape paths, lower, 6851 to 6852. A hidden smuggler's cove. If price plunges through, momentum selling will follow the rapid current. Upper, 6,859 to 6,860. The high tide mark. A swift push here will see the sails catch the wind for a raid. Market context. Today's profile is a tight coil, like a rope ready to snap. The current trading range is a narrow bay, balanced but tense between the VAH and VAL. The high concentration of booty at the POC, 6856, suggests a market waiting for a clear order from the captain or a fundamental event before setting sail. The current CVD is a slight negative, meaning a few more pirates, sellers, have been boarding ships than merchants, buyers, but the battle is close. Overall, a choppy, balanced, pre-breakout market, waiting to choose its direction of plunder. 3-day voyage logs. Day 3, December 12th. POC, 6,831. High, 6,852. Low, 6,825. A long day of slow rowing as the ship drifted higher. Day 2, December 14th. POC, 6859. High, 6861. Low, 6852. A quick skirmish led to a major treasure haul at the top of the range. Day 1, December 15th. POC, 6860. High, 6862. Low, 6856. A consolidated war chest holding the new high ground with a tight anchor. Value has been steadily marching north, but yesterday's session tightened the ship's defense. The current session has dipped back to day 1's low, suggesting a test of the previous day's gains. Acceptance below VAL signals the retreat to the old day 3 support levels, while holding the POC is a green light for an upper breakout. Volume analysis. Cumulative, volume delta, CVD. Breakdown. Session open. CVD negative 20 contracts. The first mate noted a slight lead for the bearish crew. Intraday peak. Buying. CVD climbed to 501 contracts, a brief but spirited surge of booty collection by the bulls. Current CVD, negative 41 contracts, a net negative 21 from open, meaning the bears have barely maintained control, keeping the fight centered. Intraday low. CVD, low. Negative 1,083 contracts, a deep dive by the sellers, signaling fear in the market waters at that price level. Interpretation. The initial bearish bias at the open has persisted, but with minimal net change. The large negative CVD low suggests that aggressive selling was met with responsive buying, bringing the delta back near parity. Any sustained move will require a new fleet of contracts, as the current battle is a stalemate. Risk. Management considerations. Long trades. Entry zone. near VAL 6,853 to 6,854. Stop loss below the lower escape zone at approximately 6,850, the depth of the whole breach. Profit target. Initial target at POC 6,856. Major target at VAH 6,858, and then the upper escape route. Short trades. Entry zone on rejection of VAH 6,858 to 6,860, or breakdown through POC. Stop loss above the upper escape zone at approximately 6,861, a cannonball shot above the crow's nest. Profit target, POC for first partial, then VAL. Position sizing. Never risk more than 2% of your account on a single treasure map. Always trail your stop to the last defended level once the first target is plundered to secure the gains. Potential scenarios and trade setups. Scenario A, acceptance above, VAH. The fleet sails past the high tide mark at 6,858. The enemy is routed. Setup. Enter long above 6,859, with stop at 6,855, just below POC. Target 6,865 on momentum continuation. Scenario B. Rejection at VAH. The cannon fire at the crow's nest is too much, and the price falls back from 6,858. Setup. Short on first failure, off 6,858. Stop above 6,861. Target POC 6,856. Then VAL 6,853. Scenario C. Failure at VAL. The ship's hull is breached at 6,853, and we sink toward previous value. Setup. Short a break below 6,853. Stop above 6,855. Recent swing high. Target 6,850 single print area. Scenario D. Value bounce. Price dips into VAL, but finds a hidden reef, and buyers step up to repair the hull. Setup. Long at 6,853. Stop at 6,850. Target POC 6,856. Then VAH 6,858. Smash the like and subscribe button. Click the bell to receive content notifications. Remember, the future belongs to the focused. Stay disciplined, stay curious, and as always, trade smart, trade strong, and never stop leveling up. I'll see you in the markets.